Have you ever said something like, "It was on sale, so I basically saved money"? Or, "If I return this, it's like I made $80. Or the classic, "It was free shipping, so it doesn't count." That's not math, that's psychological self-deception. And today, I'm going to explain why smart people constantly justify terrible money decisions and why your brain is secretly manipulating your financial reality. Recently, the internet popularized something called girl math. It's usually presented as a joke. If I use it many times, it's basically free. If I pay cash, it doesn't count. If I return something, I made money. It's funny, it's relatable. But here's the uncomfortable truth. This isn't a gender thing. This is a human brain thing. What people call girl math is actually a well-documented psychological bias called mental accounting, and it might be costing you far more than you think. Mental accounting is a concept from behavioral economics. It means we don't treat all money the same. Even though €100 is €100, your brain puts it into different imaginary buckets. For example, salary money equals serious money, tax refund equals bonus money, cash equals real money, card payment equals invisible money, investment gains equals house money. But money doesn't change based on category, only your perception does, and perception drives behavior. Here's what most people misunderstand. You don't make bad money decisions because you're stupid. You make them because your brain is wired for emotional comfort, not mathematical accuracy. Your brain hates loss, it loves justification, and it constantly looks for ways to reduce guilt. So instead of asking, "Is this purchase aligned with my long-term goals?" you ask, "How can I make this feel okay?" That's where mental accounting steps in. Let's break one down. You see something for €200. It's discounted to €120. Your brain says, "I saved €80. No, you spent €120. But mentally, you created a fake €80 profit. That imaginary profit reduces pain. This is called loss framing distortion. The discount shifts your reference point from €120 to €200. Now it feels like a gain. Retailers know this. Your brain falls for it. Another classic. "If I return this jacket, I made €90. No, you removed a €90 expense. You didn't generate income, but your brain categorizes it as a win. Why? Because mental accounting doesn't track net worth, it tracks emotional relief, and relief feels like reward. Now let's talk about something even more dangerous, card payments. When you use cash, you feel the loss physically. When you tap a card, the pain is reduced. Studies consistently show people spend more when using cards versus cash, because your brain doesn't register the loss the same way. Digital money feels abstract. Abstract money feels less real. Less real equals less painful. Less painful equals easier to justify. Let's say you make €500 in crypto, or investments, or a side hustle. Your brain often labels that as extra money, so you take more risks with it, you spend it more casually. Because it doesn't feel like earned salary, but financially there's no difference. Money doesn't remember where it came from, only you do, and those labels change your behavior. Here's where it becomes dangerous. Mental accounting fragments your financial picture. Instead of one unified system, you operate in emotional compartments. Savings account, fun money, bonus money, refund money, investment money. And you justify decisions within each silo, but your net worth doesn't care about categories, it cares about total outcome. This is how people who are good with money still feel stuck, because small rationalizations accumulate and slow leaks sink ships. Now add comparison. You see someone on vacation. Your brain says, they're enjoying life, I deserve this too. So you justify, but you don't see their debt, their stress, their context. Comparison shifts your financial reference point, and once the reference point shifts, your spending follows. This is how lifestyle creep starts, not from income, from perception. Here's the full psychological loop. Trigger, sale, comparison, reward feeling. Justification, it's basically free. Reduced guilt, temporary relief, repeat. The brain learns that rationalization reduces discomfort, so it keeps doing it. You don't change behavior because you remove the pain too quickly. Mental accounting feels logical, that's what makes it dangerous. You don't say, I'm emotionally distorting money. You say, this makes sense, that's the trap. Smart people are actually more vulnerable to this, because they're better at building convincing arguments. If you're intelligent, you can justify almost anything. You don't need more discipline, you need more clarity. Here are 3 powerful shifts. 1. Treat all money as one pool. Stop labeling money emotionally. Salary, bonus, refund, profit. It's all one number. Ask, if this came directly from my main income, would I still do this? That question cuts through distortion instantly. 2. Replace saved with spent language matters. Don't say, I saved €80. Say, I spent €120. It forces your brain to face the actual transaction. 3. Track net worth, not categories. Categories hide reality. Net worth reveals it. If your total financial position isn't improving consistently, the mental math is winning. Here's the uncomfortable truth. Most people don't have an income problem, they have a perception problem. And perception silently drives spending patterns for years. You don't sabotage your finances in one big decision, you do it in small, well-justified steps. Girl math is funny, but the psychology behind it is serious. Your brain is incredibly good at protecting your feelings. It's not very good at protecting your future. If you want financial progress, you have to stop negotiating with yourself, because every time you justify something emotionally, you train your brain to override logic, and logic is what builds wealth. If this made you rethink even one recent purchase, you're exactly who this channel is for. Subscribe for more psychology behind money decisions, and tell me in the comments, what's the most creative way you've ever justified a purchase? Be honest, we've all done it.